Hello and welcome to tonight's session. Now tonight, like every night that we do this, you have both the founders of REIPro, myself, Bo Manry, and Chris Goff here, and we are here to answer your questions. Hi, Chris. Now these sessions have helped REIPro members make thousands of dollars, whether we're giving strategy advice or simply helping overcome any fears or obstacles that you may be having. So thank you for taking the time out to join us this evening. This session will be recorded. It will be available inside of REIPro. So we do encourage you to go back and listen to it again. Repetition is the key. And we will be answering the questions that were sent in this week. And after that, we'll be taking live questions. So go ahead and open up the Q&A panel so that you're ready to get your questions in. And now, for those of you that are just joining us, welcome. We're glad you're here for tonight's live Q&A session with Bo Manry and Chris Goff. So let's go ahead and bring in Chris Goff. Welcome, Chris.
How's it going?
I can't complain, man. How about you?
Not too bad. You know, we went and played golf yesterday and oh man, I'm getting old, you know, just.
And I'm stiff.
It sucks, right? Getting old, but you know, hey, thanks everyone for joining us. Obviously it's the big debate night. I kind of figure, well, hey, why don't we debate on how much money we're going to make during this session? So we've got a lot of really great questions to go over tonight. And like Bo said, if you have a question during it, just, you know, type that in the Q&A box. Be happy to go over it afterwards. And just one quick announcement here that I wrote down is we do have our postcard discount. So you get 50% off all printing cost for postcards. So now's the time to really take advantage of that sale and get your direct mail out before October 31st. So that's when it's going to end. So obviously the big Halloween day. So, you know, next week, Bo, we have to dress up.
Oh, we do.
See, I wasn't going to tell you. I was just going to do something crazy and dress up. But no, I think it'll be fun. And we should probably do something special as well.
You know, I know how this is going to go down. You'll show up with an REIPro shirt on, and I'm going to show up with all this gear on. That's what'll happen.
That's right. I'm dressing up as the REIPro guy. No, and you know, we've been working on a ton of stuff lately. Yeah. And I know we were going to cover just a few things in case you didn't know, and especially the people that are just coming on board with REIPro. It's really good to kind of hear some of the things that we're doing. You know, Bo and I are working hard every single day, trying to make this, you know, the best experience for you guys, help benefit you guys, use the tool, use the education that's going to make your lives a lot better, especially financially. So that's really our goal and job here. And we love doing it. So just a few things you want to mention.
Yeah, a few things just in case you missed the emails or just at least bring it to your attention. In LeadPro, we've now put the HELOC warning symbol beside the potential equity. You can see the little triangle symbol there in that right-hand column. If you click on that, it'll pop up the HELOC warning here showing you the amount of the home equity line that's been taken out on the property, as well as this is followed through on the property details section. We've always had the icon there, but we want to bring front and center the amount there as well to let you know how much they have the potential to take out from that home equity line. Another really cool thing, Chris, that we did this past week is on the mortgage info tab, the mortgages will now be separated into what's currently applied to this homeowner versus the historical mortgages. You know, beforehand, we just had one big list, but now we're separating. Here's what's actually current. We can show up to 3 positions, what's in the first, second, or third position with the current mortgages. A couple other things we added in the foreclosure tab. We added case numbers and instrument numbers. If the county's providing that or the bank is actually providing it to the county records, we'll display that now as well. But we actually got something really cool coming out. And I know there's been a few people on here asking about it, but we have our new import routine coming out. It's in its final phases, getting ready to go into what we'd call beta tests and make sure it's all, you know, rock solid for you guys before we release it. But man, it's going to be so different. I know Chris was looking at it and it's got a lot of new features. They're going to be a little bit more high tech compared to what you're seeing today. But some things to note, I know it's been asked, can we import leads based on just say an APN number? Maybe I don't have an address. Maybe I'm using a piece of vacant land and all I've got is the APN. So now you'll be able to import properties based on the APN, or you can do it based on the property address, and no longer are you going to be required to map the owner information. Maybe you don't know who the owner is or the owner's name and address, because something we've been wanting to do for a long time is we're just going to go ahead and associate all that in the underlying tax assessor records. We'll pull all the owner information forward for you. But if you already have the owner information and you specifically map those fields, we'll pull your values in, because maybe that's exactly where you want to mail, your postcard and letters to.
Yeah, and just so let me break that down just a little bit, Bo, because you remember when you used to import, and this is for people that have imported, you had to click on each address to really associate, so we could identify, okay, we need to pull information for that particular property. We're going to do that behind the scenes, going to be automatically done for you. You're not going to have to waste time clicking on each one, because that was a pain in the ass to do. It was it's been a problem for us for a while now, and we just didn't want to go fix one thing. We really wanted to look at the whole big picture, because there's a lot to it. It's not, just as simple as doing one thing or another. There's several bits and pieces that we wanted to incorporate with this new import function. And obviously that was kind of the main focus of it. So that's coming out very soon. We'll let you know exactly when that's out, probably do a little short video to share with you. But I like to say we've simplified it. It's not necessarily, complicated and so forth, but we're excited to get that out, along with a lot of other things that we've been working on as well. So we're super excited to get this out to you guys.
All right, you ready to get started?
Yep.
All right, so the first question from Rohini, Wholesaling, says, hello Chris, I have signed up new to REIPro software. I have watched your training videos on Lease Option and Wholesaling and YouTube. Is there a way to find properties below average market value in REIPro? If so, how can I do it? Would you please share some demo example?
I guess I have to answer this one because it's addressed to me, right? So
that's right.
So thanks for the question, number one. And I really want to kind of really define what REIPro does. And then I'm going to go in and answer the question, because I think it's so important of what we do versus maybe what a realtor.com, a Zillow, or somebody like that does. But so what we do is we gather the data to determine, what the market value is. And what we do, how we do that is, it's really just a big radius of comps that are similar like properties. So we can understand, okay, what's the value of this property to begin with compared to what's close by and what is similar. So that's going to give us what we call our estimated value, where here, it's the market value, right? You also have what's called market value from a tax assessor point of view, which is completely different. Okay, so I don't want people to get confused on the word market value, because it does mean a lot of different things to people. And a tax assessor market value is really based on a formula. And every county in the country does it a little bit different to create what they call a market value. They then create the formula, and that's how much in taxes you're going to pay based on that particular value. So let's forget about that particular value, because I don't think that's what you're talking about here. So when looking for homes that are below market value, to me, this is really about what's currently for sale. And then price-wise, what would be a good house to maybe call or market to that is below what that normal market value would be on the house? Those are going to be properties listed for sale that you're going to see that. And you could go to a Zillow or realtor.com and all the other sites out there. But from an investor point of view, especially when we go to wholesaling, I want to find a combination between seller motivation and equity, right? Because you got to have equity to wholesale. Where with lease options, we could technically pay full price. So to me, that market value would not necessarily be relevant. And the problem with just targeting properties that are basically, I want you to think about this. It's like you have a seller out there that says, look, I'm willing to sell my house far below market value just to get rid of it. Now, that particular property is only going to be advertised, right? Otherwise, it'd be word of mouth or something like that. So when you have that, the biggest problem is that you're going to have all the competition that goes with it. So every investor out there wants to buy that next great deal that's kind of that hidden property that's below market value. And that's not what REIPro does. Okay. So we literally say, hey, we have over 150 some million properties and information about those properties inside the system. Whereas when I'm trying to find a property that is listed for sale, that the price is below the market value, that's really going to the Zillow and places like that. I don't personally do that because that's where all the competition is. I want to find those off market properties. And that's where LeadPro, REIPro is really going to come into play here. Now, although it doesn't mean that you can't go buy a house that's listed for sale at a good price, it's just not common. I think a lot of people think, hey, I'm going to go find a house online for sale because they already want to sell it. What we really should be focusing on is the situations. Hey, this person's in divorce. This person's behind on payments. This person has health issues. This person can't afford to fix the home up. I'm really trying to market for those kinds of properties when it comes to wholesaling. When it comes to lease options, completely different ball game. I don't really care if they're asking $1 million for it and it's worth $1 million. To me, that could be a lease option because I'm not really basing it on price. So I hope that kind of put everything in perspective. I know that was a very long answer, but I don't want people to get confused between, what this market value is and how we really determine and search for those properties that are, that kind of that hidden gem where the prices, their asking prices below what the market value would be on that property. You're going to find that in Zillow and places like that.
Awesome. All right, next question from Alfred, another one on wholesaling. When you're done with a property, closed and collected your assignment fee, what do you do with the property? Do you archive it or do you leave it in properties? What do you do?
Well, hey, Alfred, I when I looked at that, it's kind of personal, it's, what do you want to do with it, type of thing. And, but the very first thing to do is celebrate, right? Hey, just close the deal. I always personally like to make copies of the check. If you get a check, keep all the pictures, kind of keep everything about that property all in one place. And obviously you could do that in step 10. You could do it in a file cabinet. That's kind of a personal choice. But what could you do? And I think that's what I want to answer is obviously you could archive it. Bo being, a program, he likes to archive everything where I like to delete everything. So
personal
that's
choice.
kind of a personal choice, right? A couple other things is I would definitely put it in the do not mail list. You don't want to accidentally build a marketing campaign and that property address happened to be in it again. You're sending out a postcard to it. So I would definitely put it in the do not mail list for sure. Another thing that I would do is actually change the status. I would go in and create a custom status that says deal closed. Every time you do that, change the status of that property and at least put it in the do not mail. And then I want to move it out of my, when we save a property, you can create a status, but most people, they just keep saving properties on that main screen. I don't want to see that property on that main screen anymore because it's done. It's over with. I've already worked it. So I want to change the status of it, and that's going to move it away from kind of the properties that I'm working. So those are just a few things, but again, I think it's personal
Yeah,
on what
also
you
the
want to do.
archive, the archive will drop it off that main screen as well. But then you can resurface and search the archive if you need to ever pull it back up and see anything.
Yep.
Next question from Jason on marketing. Does the REIPro marketing system prevent you from duplicating who you're marketing to? For instance, if I have a pre-foreclosure list and an absentee owner list and the same person and address are on both lists, is there anything that warns you that you're about to send them to two different postcards? Furthermore, if not, do you have any suggestions on how to prevent this inside while using the system? So first comment, and then I'm actually going to just show you actually how to do this, Jason. But no, REIPro doesn't prevent you from adding properties to multiple campaigns, even if it's already in another campaign or even in your properties section. A lot of people want to duplicate it for various reasons. Now, it does prevent you, from the word prevent, adding it to a campaign if it's on your do not mail list. But if you want to prevent adding a property to a campaign that's already in another campaign, or maybe it's in your properties area, yes, there is a way to do it. You want to use the new records only feature under the results settings. So what I thought would take just a moment, I think showing you by example probably good here. Let me just switch to REIPro. Get on. And so let's just say that we're over in LeadPro, and I'll do a quick search. I'll just use the vacants in Peachtree City, Georgia. 25 leads here. I'm just going to select all, and I'm going to add it to a campaign. We'll just call it T1. And now all those leads have been added over into that T1 campaign. You can come over here into marketing. We can see it. We see T1 here. It was the vacant, had 25 of them. Now, to show you what I mean by preventing versus not letting you add other duplicates, I'm going to go into T1 here, and I'm just going to take this first property, 240 Cedar Drive, and I'm going to click on it, and I'm going to add it to my do not mail list, okay? And then I'm going to go back and run this exact same search. Nothing's changed. I still have the same 25 properties, but this time if I checked and highlighted all 25, and I want to add all these to a campaign, say T2, I'm going to hit add selected leads, go back up here to marketing, and now you'll see my T2 only has 24. And that's because the lead that was in your do not mail, it prevented that from going over into that campaign. Now, if you want to do the reverse, what you're talking about is I'm already working these 24 or these 25 leads. If you search on a campaign, and you can save all these filters, especially like doing pre-foreclosures, you do it every Monday morning. I want to see only the new stuff. Come underneath the results settings here, and there's a new records only flag. Let's just turn that on. And now when I hit apply changes, we're going to come up and get no results found. And that's because we are working all 25 of these at this point. So there's no additional new results found for this search. Okay. So that's how you would, it prevents you from doing your do not mail list. But then if you only want to see things that you're not currently working, because you don't want to duplicate somebody that might be in your pre-foreclosure that you're working versus absentee owner, use the new records only flag for that.
Yeah, that's really the easiest way. The other way was a pain in the rear, but this is actually the easiest way.
All right, I'm going to switch back here. All right, next question from Todd. It's a general question. What experience do you have with mailings during the holiday season? In the past, I would stop mailing in mid-November, start back again in mid-January. I do this guessing that it makes sense to stop during the holidays, but I really don't know. What do you guys do? Thanks, and a shout out to the support staff, Todd.
Hey, Todd. Hey, thanks for the question. No, it's actually a really good question. So what I thought how I would answer this question is, Bo, if you wouldn't mind, go to the next slide. So this is one of my students here, Rex Kress, and he did 20 deals his very first year working with me. And as you can see, he made over 660 grand doing this. When he wrote this particular testimonial here, he's working on his 12th deal. 5 of those 12 deals were all done between December 28th and December 31st. I always tell people, look, every single day, all year long is the best time to market for properties, because you think about it, marketing for properties all comes down to timing. People's circumstances change every single day. Their situations change every single day. And you never know when that's going to happen until you send them out some marketing material. Now, if you're looking at like bank-owned properties, the best time to make offers and really be active in the bank-owned industry is at the end of the year, because they're trying to get it off the books. But from a general real estate investing, it's every single day. And that's, again, just try to cater your marketing towards maybe the holiday. It's something new. It's something different. It stands you apart from the competition, sending out, just the same old, be creative. Like, we have a Halloween special right now, but we also have 3 different Halloween cards you could also send out as well. And I can tell you, they just flew off the shelves last year when we did this. So I would totally be marketing during the holidays, because just because it's a holiday doesn't mean that people don't want to sell. That doesn't mean people don't have problems. It doesn't mean any of those things. So I think it's a great opportunity. Rex definitely thinks it was a great opportunity. And many other of my students, this is a really good time of the year. I know it's big election year, and a lot of people have fear during these times, but the biggest thing people fear the most is running out of money and problems and health and all those things that really do affect us as investors doing deals. So I would be marketing heavily during this time of the year, actually.
All right. Susan, seller finance question. I know that, quote, subject to is basically subject to existing finances, correct? Meaning subject to the mortgage that's already in place. It also stays in the seller's name and only the title transfers, correct? A wrap wraps around an existing mortgage. Please talk a little bit about a wrap and where and when you should use it. You can do a wrap in any state, right? Thanks so much and appreciate you guys.
Yeah, so thanks, Susan. And I want to try to break this down as easy as I can, because actually, Bo, these are things that I think a lot of people get confused on, the seller financing in itself. But it's the concepts where you throw in the wraparound mortgage, you throw in the subject twos, you start throwing in all these different things, and it seems overwhelming. And, everyone calls it something different. It's quite strange. But what I thought I would do is really define exactly what these pieces are. Bo, if you wouldn't mind, go to the next slide. So and then I'm going to really answer your question here at the end. But so buying a home subject to the existing mortgage, what does that actually mean? And a lot of people have, they call it sub to, or, they call it all kinds of different things, but it's not really a strategy. It's not really anything more than a sentence that goes in an agreement. So when does this take place? So it means the seller is not paying off the existing mortgage. Instead, the buyer is taking over their payments. Now, keep in mind, they're not qualifying for the loan. They're just going to start making these payments. The unpaid balance of the existing mortgage is then calculated as part of the buyer's purchase price. So if the seller still owes $100,000 on the house, we still, we might be buying it for $150,000. Okay, it could be worth $200,000. But we're still paying on that original 100. So under a subject to agreement, the buyer continues making payments to the seller's mortgage company. However, there's no official agreement in place with the lender. So keep in mind, when we seller finance, the owner that has a mortgage on the property, it's still in their name. Okay. We're not taking over their loan. We're just making the payments on the loan so it stays current. Okay. So the buyer has no legal obligation to make the payment. Should the buyer fail to repay the loan, the home could be lost to foreclosure. However, it would be the original mortgage name, which is the seller. So I want you to think about that for a second. Basically, we are promising to continually pay on your loan. But if I stop doing that, the loan is not in my name. It's in your name, Mr. or Mrs. Seller. Okay, so that's what subject to is. And it's nothing more than a sentence that goes into an agreement. All right, next slide. So, what is a wraparound mortgage now? So, wraparound mortgage, more commonly known as a wrap, is a form of secondary financing for the purchase of real property. The seller extends to the buyer a junior mortgage, which wraps around and exists in addition to any superior mortgages already secured by the property. So, if there is an original loan for 100 grand that the seller has, we are literally creating a new agreement, which is nothing more of a price. I want people to think of it's a number. So we still have to make payments on the 100, but if the seller agrees to seller finance it for a total of 150, I'm paying the bank the 100 or whatever the original agreement is, okay, which could be different. It could have a different interest rate, different term, different, all kinds of different, okay? And then the difference between the 100 and 150, I'm paying the seller. Okay, because that's their gonna, you can look at it as their profit. The whole picture for the investor is 150. Okay, so that's when we're going to use a wraparound mortgage. Now, if you go to the next slide, I want you to think about this: a seller without a mortgage. So a seller owns it free and clear, and they are going to seller finance us the property. So we're going to create a note. It's basically, I promise to pay this much for the property at this interest rate, monthly payments for this long, and it's going to be amortized this way. Okay, so that's kind of the agreement. Number one, the deed goes to you. There is no sub two clause because there is no existing financing on the house. So there's no need to have that particular clause. There's no wraparound agreement because there's no existing financing on the property at all. There's nothing to wrap. It's just a seller finance agreement. You're then going to create a new mortgage agreement between you and the seller. It's very simple to do. This is obviously, the way we would prefer to do it just because there's no existing financing, but you're going to find most sellers are going to have a mortgage on the house. Now, if you click the button, Bo, now let's look at a seller with a mortgage, meaning an existing mortgage, and they seller finance the home to you. Number one, you get the deed. The loan stays in the seller's name. And because there is a loan, you now have to add the subject to existing finance clause in the agreement. And because there's an existing loan on this, we are going to do what's called a wraparound agreement. Okay, so we have a new mortgage agreement. We have the wrap that includes an existing loan terms plus any additional price, interest rate, and terms on that. So as I said before, if there's an existing loan for 100, but the seller wants 150, we're still paying on the original terms that the owner and the bank has, but the seller's getting that additional 50 paid out in how much down, the interest rate, the term, and so forth. So we have to have what's called a wraparound agreement. So just think of it this way: when there is no existing mortgage, there is no sub two, there is no wraparound, there's nothing but just a new mortgage agreement. But when there is a mortgage, you have to have all this additional stuff. So I hope, and that wasn't just for Susan, by the way, I was trying to educate everybody because to me, this is one of the most confusing things for most people is, and I get it because I've heard some of the YouTube videos out there and people, I'm going, what did he just say? I'm confused on what they were trying to say. So try to break this down as simple as possible. A sub 2 is not a strategy. It is a sentence. That's it. That goes into the actual agreement. You have to have a wrap because you're basically, what you think, you got a loan over here, but now we're creating like a new mortgage over here. So what we're going to do is do what's called the wrap. So it's kind of wrapping around the original loan on that. So I still have to pay on the original loan, and I still have to pay the difference, whatever that difference in the wrap is, to the owner as well. So I hope that broke it down for everybody. And I hope it answered your question, Susan. As far as can you do it in every state? Yes, you can do it in every state.
I think you did a good job explaining that. All right, next question from Michael. General question. Are you looking into concentrating a little more on the land side of investing? I started getting into vacant land investing a couple of years ago, and my business skyrocketed. There's a big demand for rural land these days and a big demand on software like REIPro. But for land, I actually think REIPro works pretty good with some of my land investing needs, but would love it if you added postcards for vacant land. I've been an REIPro subscriber for a while now, and I don't want to leave you guys for some other real estate software just because of land. You have so much to offer here. Please look into land investing. I'm pretty sure it'd be worth it on all ends. You probably don't even realize how many land investors use REIPro. It'd be a win-win, an excellent deal. Thanks, Michael. Well, first, Michael, I really appreciate the suggestion there. Now, we certainly can add postcards for vacant land. And of course, if you have postcards that you've been using for vacant land, you can upload your custom postcards right into REIPro as well. Now, from a leads perspective, we do have both residential and commercial vacant lead. And I looked up what I think is your investing area, Queens County, New York. And I thought I would just show you real quick how we can go about searching for vacant land from a leads perspective. So I'm gonna switch over here to REIPro. I'm going to go into LeadPro. Now, I don't want to get confused by Vacant. Now, Vacant is a lead source, excuse me, that's provided to us by the United States Postal Service. They're marking properties as vacant. Now, would land be vacant? Probably, most likely, but I wouldn't focus in on that. But absentee owner would be really the same thing, because if it's a piece of vacant land, they're not living there. So generally, the tax assessor is going to say this is an absentee owner. So I'm going to use that one in this example, and I'm going to look up Queens County, New York, for absentee owners. Now, this is just initially going to be all absentee owners. Queens County, New York, 118,530 leads. But we have all these filters on the left-hand side, and one of these is called property type. If we click the arrow to expand that, we have two groups, residential and commercial. Again, I'm going to expand that. I'm going to uncheck all residential there, and I want to look for vacant land. So I'm going to click on vacant land. Not sure if you're doing commercial as well, but I'm going to go ahead and include commercial vacant land here. Let me find it here. And this county, maybe they don't have it in this county. Huh?
It's right. Land.
I was looking for vacant, but there you go. Land. All right. Once we select vacant land and land, I'm going to hit apply changes. And now if we look at this, we have 6,025 leads for vacant land. And you can verify that. We can click on the address. We can pop it up. You can see that the county is reporting this as residential vacant land. Of course, you can see beds and baths are not being reported, and they wouldn't be on vacant land. So, from a leads perspective, we've already got this whole vacant leads here. Now, I'm not sure if there's other things you do that maybe you have some suggestions for REIPro. I know a lot of vacant land is sold seller finance, which, in step 4, we have seller finance offers being constructed and stuff. So, but hey, if there's stuff in there that would help you from a vacant land investor standpoint, feel free to shoot us over those suggestions. We'd love to see them. All right, next question from Jonathan on wholesaling. When it comes to making offers to sellers, is it better or more effective to talk to them by phone or to go over with an offer, or is it better to use a letter and email them the offer in writing?
Yeah, just to go back real quick with Michael, I was making some notes. The postcards, we can definitely do that. Um, I
Yeah,
mean,
for
we
sure.
could actually do that very quick. It may also be a good idea, Bo, just even watching you do that short video of how to search for the land. Might be a good idea for us to do a video just on that. Pretty much what you just did. Um, but I'm just making myself notes. You know, we learn a lot from you guys to make the system better, and we appreciate that, and we really do take that to heart. So,
And truthfully, it could be its own lead source in general. Just pull vacant land right out there on the top.
yeah, and it'd be good to hear from Michael if he would send in an email to us. What are you doing with the land? Are you wholesaling it? You know, I love seller financing land. To me, that is the easiest way to do it, by the way, is seller financing land. People will seller finance land to you all day long, all day long. It's awesome. So I would love to hear kind of, you know, what else are you doing that maybe we can implement into the system as well. So, all right. So, Jonathan, yes, this is a big deal for me, this question, because I want you to think about the question and this is for everybody, because think about it. You found the property, you had to market the property, you drove, however you found the property, you put time and effort into it. Then you had to research the information, then you had to contact them. You probably looked at it, did a, you know, an inspection on the property as far as calculating the cost of repairs. You took the time to run the comps on the property. And now we're getting down to the offer stage. You have put so much time and effort into working this deal. The last thing I would ever have you do is mail an offer letter. Like, you put so much time, then you just throw it in the mail, right? I personally love doing this in person when possible, because doing it in person is just completely different. And if you built a relationship with the owner already, then it's actually going to come very natural. Um, or you could do it by phone. But if you do it by phone, just before the phone call, I want you to email the offer letter, because they're going to have questions. I want to, you know, give you the opportunity to explain your offer. I always, you know, set my offer up, you know, based on, you know, the comps, the amount of repairs, the time it's going to take to actually fix up this property. You know, the best I can do is this number. There's going to be a conversation there between you and the owner. The last thing we want to do is mail out the offer, and it's like so easy to just say, no, I don't want to take it. But when you know, when you're close in face to face, it's really hard for people to say no. They would ask you questions like, oh no, I can't take that much. I mean, can you not just pay a little bit more? At least you have a conversation that way. So just make sure that we try to do this as personal as possible. And because making the offer to me is one of the most important steps. We can easily go find leads. Like, it doesn't take any effort to do that. We could go to LeadPro, find some leads. So I could build a direct mail campaign. You saw how fast Bo just moved those leads into a mail campaign. But when it comes down to the offer, to me, that's where I see so many people fail. Okay. And especially, I have made offers where I'm making a wholesale offer in person, and then they are, no, Chris, I can't go that low. I have a mortgage. I've got to pay this. Well, how about if I just cover the payments right now for you? Would you be open to doing that? It's amazing. Sometimes you think it's a wholesale deal, and then the conversation turns into something else. So you try to do this in person as much as you can. Otherwise, do it over the phone, email the offer just before, and that gives them a minute or two to review it, and then you can go over it. And if they have any questions, obviously you're there to do that. So that's me personally. I think it's the best way to do it. So hopefully that that helped.
All right, from Gene, a wholesaling question. Greetings, Chris and Bo. I'm very fortunate for your training. Tonight, I'm sitting down listening and learning at the same time. Once again, thank you for this gold mine. I am preparing for a mass campaign on wholesaling. Any suggestions? Thanks.
Um, well, number one, thanks for those kind words. This is very, very nice. We love doing this, right? I mean, this isn't, we take the time out of our day to do this, but at the end of the day, like, you want to talk about real estate, that's like all we want to talk about. Like,
It's our
that's
life,
it,
our passion.
other than golf or airplanes or boats. No, but I love doing it. And, I think it's great that, you're getting ready to do a mass mailing. Just keep in mind, do target market your mass mailing. Don't just throw a bunch of stuff together and just throw it out there. Again, you never know. It's timing, right? I always tell people, Bo, that, man, I wish I could just snap my fingers and get the seller to go, Gene sent me a postcard today. I think I'm going to respond today. I'm going to ignore the other 5 that I got. But Gene's, I think I'm going to do that for him because he's going to give me a good deal,
That would be nice.
I wish we could just do that.
You muted yourself.
This is all timing. And, I think the most important things you can do is don't be the person that goes, I'm going to send out 12 postcards and I'm going to see what's going to happen. Now, I don't know, but what if I get calls? Well, then I know that it's legit, right? So, and I always tell people, also is, the biggest thing new people are so scared of is somebody saying yes. They're not worried about people saying no, right? So, look, get it out there. I think the very first step when you do a mass mailing, Gene, is to actually do it. I think so many people, it's like, oh, no, I'm just going to send out a few. I just kind of want to test the market. I want to make sure that it's working. But what am I going to do if they call? And that's why I said, that's why we built the executable step system. I mean, it's literally going to help walk you through the entire process, especially if you're just getting started, which is going to be huge. So, but test, hopefully you've done some testing, Gene, as far as postcards or whatever, letters, however you're doing it, and trying to find that good one. I do have a few personal favorites in there when I do, especially do from a mass mailing point of view. I love our cash or terms card. When you do a high volume, just because I know, we might try to be targeting wholesaling deals, those deals could turn into a lease option or seller finance very quickly. But if you only market them that says, I'm going to pay cash, blah, 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 most sellers know that, oh, well, they're just going to lowball me. And I think that's where you have to open it up and say, hey, look, if I'm going to send out a ton of mailers, I want to try to, hit everybody. And I love that cash or terms postcard. It's a general number 3, I believe, in your library. I would totally use that card. That's one of my favorite cards.
Heavily used.
Yep. And then do it consistently. I think that's another one for direct mail.
Yep. Okay, from Bailey, pre-foreclosure, I'm looking into implementing cold calling instead of direct mail. Is there any integration option for REIPro with any of the power dialing softwares? Well, you can certainly run a skip trace on a marketing campaign, and you can get the telephone numbers, 3 landlines, or up to 3 landlines and up to 3 mobile numbers, along with any email addresses that we can find. Now, from a direct integration today, no, we do not have a direct integration. You would have to export the campaign after you run skip trace, and then you could use any power dialer of your choice by importing that campaign over into them. Now, having said that, we are in negotiations with a power dialer. Now, we've had to vet these people. It's a feature. Hopefully, they'll be coming in the near future. But you got to be real careful when you're using software and these auto dialers out there. You can get into a lot of trouble, especially if you violate the TCPA, the Telephone Consumer Protection Act. and not all power dialers are the same. That's why we had to spend a lot of time trying to vet one of these. Okay. So, but for those of you kind of wondering what we're talking about here, I thought I'd explain real quickly kind of how this is going to work. So let's say that you have 100 leads in a campaign and you want to call each one of them. Now you could simply just skip trace it, pick up your phone, and then you can call each one of them. This can be a little bit time consuming, but that's what we're going to do, right? We find the phone numbers and we're going to call them. Or if you can use a power dialer that is TCPA compliant, and there's a lot of rules and regulations around that, then this can speed up this process, 10-fold, 60-fold. So for example, this system starts dialing, and let's say an answer machine picks up. Now you can have that auto dialer, and I'm going to use quotation marks here, play your pre-recorded message. I'm not talking about voicemail drops here that might get you in trouble. It actually will play your message that you've pre-recorded for this dialing session that you are interested in purchasing their property. It's not going to just drop it in there without ringing the phone. It would be the same as if you said, hey, I was just calling about your property, and it would leave that voicemail. It'll be your real voice. Now, but the system could be, while it's leaving that message in the background, it's off dialing the next number and so on. Or we could have a whole bunch of numbers that it's going to just keep dialing all 6 of those lines or those numbers on that one property until it gets a hold of somebody or leaves a bunch of messages. And it's just going to keep doing this until it goes through all 100 leads. That's what she's talking about by a power dialer. Hopefully that will be in REIPro in the near future, but we did have to, be very cautious. We don't want to bring something to you guys that potentially get you in trouble and you don't know it.
Yeah, and that, honestly, that is a very sad fact right there. A lot of these companies, they go and they put this crap in there, and they'll have all these hidden disclosures so they don't get sued by you, that ultimately gets in trouble.
Mm-hmm.
That is a hard, cold fact, and that is BS. Because those are the kind of companies that don't even deserve to be in business. We're supposed to, be building a business to help other people. And it's really sad. So like Bo said, you really do need to be cautious.
Josephine, pre-foreclosure. Hi guys, thank you for taking our questions. My husband and I are trying to get involved with pre-foreclosures. We try to focus, but I find many of them very pricey. We are based in New York and have some experience of Long Island, so researching properties there. Any concrete advice on how to screen our deals? We have bought a pre-foreclosure in the past at auction. I think I have analysis paralysis. How do we take the first concrete steps to get a good deal and not over worry about the financing? No, there must be deals out there. Thank you. Husband is in construction. I'm an RE agent.
I don't think there are any expensive houses in New York, right?
Might not be right now.
Kidding. You can't buy a bathroom in New York for $100,000, right? I mean, but hey, I love expensive areas, especially with pre-foreclosures, by the way. And I want to go back, and my response is not very long, but I do want to clarify just a couple of things. When I look at a pre-foreclosure, price is irrelevant to me. Like, it has nothing to do, to a point, has nothing to do with the actual structuring the deal and doing the deal from start to finish. Okay. Because I need to focus on what are the back payment amounts? What actual cash am I going to need to put into the deal? So you find $1 million property, they may only be $20,000 behind on payments. It may need $50,000 in repairs to put it back on the market to resell. When you make up the back payments, Josephine, that stops the auction. There's no more auction anymore because the loan is now brought current. But in that example, I really only need $70,000 of my money versus $1 million. I know you mentioned here you had bought a pre-foreclosure at auction, but when you buy a property at auction, you're really paying the minimum bid or whatever bid that you won in full. And that will get extremely expensive. Most people could only buy one house at a time that way. But when we're working seller financing with pre-foreclosures, I only need money to make up the back payments, fix up the house, some holding costs, and some other things. So I put a slide together actually for you, just to kind of break down some of the important pieces that I want to focus on. Number one, what is the after repaired value, right? So obviously, that's the number one thing that we need to look at no matter what strategy we're focused on. The next one is the loan balance. So, what do they actually owe on that property? What is the balance of it? What we need to obviously see the equity in the property in order to structure this type of deal. If there is no equity, you would have to buy it either by a short sale or it's going to auction. Okay. I don't want to focus on that part when I talk about pre-foreclosures. What is the back payment amount? Most of the banks will use the terminology reinstatement amount. Um, this is really what they failed to pay on top of penalties, attorney's fees. It's going to start adding up every single month. So the sooner we get to the owner and figure this out, the sooner we could do something. Obviously, the repairs. What does the home need to be fixed up and resold? Holding cost. What are their current monthly payments? Because you're going to have to keep making, once you make up the back payments, the loan is brought current. So it's no longer in foreclosure. But I'm going to have to keep making those monthly payments until I get the home fixed up and resold to a new buyer. I would focus on the average days on the market in the area that you're looking. And then the last one, which I think is probably the most important, is the buyer pool. So if I go buy an expensive property, I guess my only concern would be how many buyers are looking to buy a home like this at this price point. If you were working a $30 million property, the pool of buyers is so low that you probably wouldn't do the deal. So there is a point where it could get too expensive, but I don't really focus on price for these types of transactions. I really focus on how much equity is in there, how much are the back payment amounts, how much are the repairs, the holding cost, how much hard cash am I going to have to use in order to do this deal. Now, once I put it back on the market, I'll fix it up, put it back on the market. Once I sell the property to a new buyer, then that's going to pay off the original loan on the property, pay back my expenses, and then any profits that are left over. So one of my students did a pre-foreclosure in the Bronx. Okay, so this was a 2-bedroom, 1-bath, and it was valued at $1.2 million. And we put it under contract for $700,000. And he put $200,000 in repairs, totally, completely remodeled this. It was beautiful. That's a huge profit. I mean, you're looking at a $300,000 profit on one deal. I mean, for most people, most people don't make $100,000 a year. You just did $300,000 on one deal. And you got all of your money back, which wasn't the full amount. It was just the back payments, the repairs, the holding cost. And then you go do it again. And you keep doing this over and over and over again. And if you look at the ROI on the money that you're using, it's a no-brainer. A no-brainer. Because if you did that, if you put in, let's just say you put in $100,000 of your own money, okay, and you made, let's just say, $50,000 on one deal. So you got all your 100 back, plus you made $50,000. If I did that 4 times in 1 year, what would the return on investment be if you made, that would be $200,000 profit and you got all your money back? It's a home run. And that's what I love about pre-foreclosures. And just think about all the people you're helping out there. So if you haven't already, I would definitely be getting into our training in the education center and go through that whole pre-foreclosure training series, because that is really going to help guide you of, exactly how much money do we really need to do a pre-foreclosure? And I think that might be an extremely valuable resource for you. So,
Well, really, the whole education center is valuable. That's why we put it out there for everybody.
well, I like to think so since I do the education, but you never know, right?
All right, next question from Susan. Just curious, do you have an affiliate link to share REI Pro by chance? Thanks. We currently do not offer an affiliate program, Susan, outside of the national RIA. However, we are looking at ways to do that for REI Pro members or maybe other organizations that meet certain minimum requirements. But today, do we have an affiliate link that you can use just to share? No, we do not. Priscilla, pre-foreclosure, a lot of pre-foreclosure questions tonight. Are pre-foreclosures a good RE investing strategy given the current environment with COVID-19?
Yes. It's obvious. Anyone can tell you how many jobs were lost, how many people couldn't make mortgage payments. This is why the banks are postponing the auctions. I mean, just because of that situation is going to have effects for the next couple of years. So this isn't just a strategy today. This is a strategy moving forward that is just really, I always said it was it's like lease options to me. It's a niche strategy. And it's one of the best strategies from a point of view that not many people actually know how to do it. And I think we're probably one of the few people that even educates people on the subject matter. Okay, so I would totally be in the pre-foreclosure business just as much as we, just had that previous conversation. It just makes so much sense. And especially think about, they're behind on payments because of COVID, right? Jobs were lost because of COVID. All these things it's like a domino effect. This is a great time to be in there. And also keep in mind, there are a lot of buyers buying right now.
Oh, yeah.
I mean, people are trying to give us money left and right. It is amazing how many mortgages are out there when you think of how many people lost their job. Like, you're thinking there's no way that makes sense. But that's what's happening.
Hey, and this moratorium will be over at some point here in the near future, and the banks are going to have to start calling those loans due with the foreclosure process.
Well, think about it. If you bring the loan current, the bank's saying, thank you.
Yeah,
Thank
they don't
you
want
for
they don't
doing
want
that.
They don't want to go through it.
No, this is like a really, really good time to do it.
All right, I think this is the last question from what was sent in, coming from Brooke. Hi, guys. My question is about calculating ARV. I know how to pull comps and all the required filters needed. I get all of that. My question is this. When getting comps, what if I want to bring the property I am looking to purchase / rehab to all of the latest and greatest standards, and the properties I'm using to comp are stuck in the 1990s? How do I get an accurate ARV?
Yeah. So, hey, Brooke, this is really a great question. And I'm not going to go through, how to do, calculate the ARV, blah, blah, blah. I'm going to get right into the heart of your question here. And so I even took some notes on because I want to make sure, not just to answer you, Brooke, but I want to make sure that everybody's on the same page as well, because I want everybody to learn from this. And that's the whole point we get together and do this, is so everybody can learn from this. But here's what I want you to do first. I want you to first take the current comps, okay, the ones that are in the best condition, the most comparable, even if they're stuck in the 90s, as you said. I want you to calculate the repairs as though you're going to put it in 2020, okay? But use the comps that are stuck in the 90s, right? So whatever comps you do have available, if those comps aren't up to par, still use them. This is like the best negotiating tool you actually have now with the owner, because if the comps are technically less because they're not updated, that's going to give you a much better offer to present to the owner. And the owner's going to have to be like, look, well, that's what the comps say. But we do have to bring everything back up into, today's world. Okay. if you calculate your offer based on comps that are less, your offer to the seller is going to be less, but taking in consideration that you have accounted for the cost of putting it in 2020. And I hope I didn't lose anybody on that. Now you're going to have a great deal, number one, because if you've accounted for all the costs to put it in 2020, but you're really using comps from the, I would say 90s, but houses that look like they're in the 90s, then you technically could sell the property compared to the 90s looking houses for the same price and still make good money. Right. So that's number one, is just calculate your offer based on the comps that you do have available. I think the big question is what could I sell it for? And that's going to be different than what it's actually worth, which is the ARV in this case, because you don't really have anything that really, is comparable to this particular property that you're going to put in. So I would, and this is just a couple of ideas for you, is you could actually go outside the neighborhood in this particular case, because there could be another house that's somewhat close by, but it's in a different neighborhood and it's more comparable to what you want to do with this particular property. So you can do that. I could tell you appraisers do it all the time, by the way. Bo, how far did they go? They went like
miles.
They went all over the place looking for
we did exactly that. We brought a house up to today's market standard. Everything else was kind of older, and they had to go miles away to justify the number.
Yeah.
But they did.
You could increase the price, because I think it's more of a price than an ARV in this case, which sounds funny, but that's what we're working with here, is try to increase it by 10 or 20%. See what happens. Your biggest concern is, will it appraise? If you go too much on the price, then it's going to be a lot tougher to get that home to appraise. And then the buyer's either not going to qualify, or they're going to have to bring more cash to the table. It's going to make it more difficult. But, houses go up in value. I remember the house across the street from you, Bo, in Georgia, that all of a sudden they just get this ridiculous number, like way more than you thought it was going to be. So it can happen, but it does make it very, very tough. There's no science or formula to calculate this particular situation, because you have to work with what you have. But if we go back to what I said in the beginning, calculate everything you do. So if you were to bring the house up looking like the ones that have sold, and maybe you only spent 30 grand to do it that way, but you want to spend 50 grand because you want to make it look like today's standards, then use the 50 in your repair, but use the lower comps, and then your offer is going to be much lower anyways, and you're going to be able to account for the expense even if you bring it to 2020. And then you could technically maybe ask for a little bit more. There's no formula for that. That's the only downside. I would stick with, trying to raise maybe 10 or 20%, depending on the area and the demand. But I also want you to think of this, though. Are people in that neighborhood, and this could be an easy answer, are the people in that neighborhood actually looking to buy a home and pay more for a house that looks like it's in 2020 versus spending less money and maybe doing the 1990 house? So
you can over rehab it and eat up all your profit.
So just be careful with that. And obviously, if you know the neighborhood very well, then you're going to know the answer very quickly to that. But anyways, sometimes it's just a guessing game, unfortunately.
All right. So we have made it through all the ones that people took time to ask their question. Got a few live questions in here, and I know that probably the big debate starting right now for the last one, but we will go here and try to answer these live ones as much as people want to hang in there.
Yep.
All right, so the first one is from Meacham. I'm new to REI Pro. Is there a way to upload from Excel a group of parcel numbers to conduct research? Right at the beginning, we talked about this new feature, or I shouldn't say new feature, it's going to be an upgraded enhancement to our import properties. You're going to be able to use that parcel number to pull them in, and then we'll tie the parcel number over to the tax assessor, pull all the property detail. That'll tie in the mortgage history and anything else going on with the property. So you will be getting that here in the very near future.
Yeah, not like 3 months from now, like
No.
very soon. Okay, we're putting some final touches on it.
All right, Marcus, lease option question. I am a new member, currently learning the lease option strategy as my niche. I wanted to know, when looking at a property's information after clicking on it in LeadPro, what information is the most pertinent to know before I call the homeowner?
Ooh, the one thing that would, and really it doesn't even matter, but the one thing that I like to pay attention to, if there's a reported mortgage on it, I want to see about how much potential equity is in the house.
Mm-hmm.
Now, it doesn't have to have equity, but I want to, what it helps me with is if they have 80% equity, that's a different person than somebody that has $5,000 in equity. Okay, so it does, I don't know, helps me in my approach. I guess it's just more experience that tells me that. But there's really not a number or, a line item in REI Pro that I go, oh, that's the trigger. Oh, now I should call this one because of that. Because we don't know their situation, and we won't know until we reach out to them.
Okay, question coming in from Jesse on marketing. Is there a way to pull up properties that have flip-flopped, say from for rent to for sale, or the opposite, for sale going to for rent? From a lead source perspective, Jesse, we're not tapped into the MLS from a live for sale on the market like that, or the for rents. So we really don't know if something's going to flip-flop from a for rent to a for sale from a lead perspective in REI Pro.
Yeah, really only a realtor would know that.
Right. Okay, so Dior has a two-part question. First one is, what is the best way to find property owners who don't have any updated phone numbers in the contact system? Is mailing the only way to make contact with the property owner?
No, it's not the only way. From a bulk point of view, yes, I would do mailings. If it's one house that you're trying to do, try to find them on Facebook and message them.
Or you can talk to the neighbor. If it's local, you can drive over there. Second part question says, I have a handful of vacant real estate in a particular state. Is there a way to leverage these properties to do a deal or secure a loan?
The deal part, yeah, I mean,
definitely do a deal.
That's a big general question, so I'm not really, to me, I think every possible way to make money in real estate starts with a property, and it could be any kind of property anywhere. So there's always a deal to be made. We just need to find out what the situations are in order to really structure the proper deals.
Yep. Next question from Jesse. I'm building my first list for sending postcards, and I want to send multiple postcards to each property because I think most people need to see a postcard more than once. My question is, how can I keep track of removing properties from the list if it's no longer a potential lead? Does this have to be monitored and done manually? I agree with you, Jesse. Doing a multi-touch campaign, there's those rules of marketing. You got to touch people 3, 4, 5, 6 times before they're going to take action. So I agree with you on the multiple postcards. And if somebody calls you up and says, don't send me any more postcards, or this is no longer a potential lead, just add that property to the do not mail list. And then when that second mailer or that third mailer gets ready to print, we filter those out at that moment in time and we don't mail those. So do you have to do it manually? A little bit, because we're not going to know if it's a potential deal or not. We won't know if somebody called you and said, don't send me any more stuff. Or if you've already turned it into a deal, you wouldn't want to send the second or third mailer to a deal somebody's already contacted you on. So you could remove that from a future mailing or put it on the do not mail list.
Bo, just for people that don't know,
Mm-hmm.
can you show them real quick where that is
Sure.
in REIPro?
Oh,
So it is manual from the point that you need to start typing the address in, but
well, a couple different ways. Let's say you remember these campaigns we created earlier. Let's say that I mailed this vacant list 25, and we get a call back from someone on this. We could search the address right here to find out, where the address is in this campaign. I'm just going to open the campaign up, and let's say that this Tyson here called and said, "Look, do not send me any more mail." Now we could add it to the do not mail here, put a check mark, bulk action, add to do not mail. Okay. If this was a campaign that had already been ordered, there's a way to say exclude from future mailings. That's a different option, but I have not actually ordered it, so I can't show it to you on that one. Same thing would be if somebody calls up and you're already working through the deal and it's turned into a potential lead, and you've already done mailer 1, but you don't want to send them mailer 2 and 3. Again, add them to do not mail, or you can block it from the future mailing.
yeah, and if you go back to the marketing page, you can click the do not mail at the, there you go. I'm pointing on my screen like it's right there.
Yeah, you could add to do not mail list manually. So you could come in here, and just start typing in the address and select it, hit save, and just add an address right there to your do not mail. And that would block that address from any future mailings, whether it's in an active campaign or not. Okay, can we have from, not sure the name here, can we have some via VA incorporates in the system? Thanks, Gene. I'm assuming with virtual assistants, if you're on a plan that's not a single user plan, you have multiple users, you could definitely add a VA, a login to the system. And then depending on what they're doing for you, whether it's pre-qualifying the seller or just doing the basic research, adding notes, you can give them access to the system like that. Not sure what other parts of incorporating that you're asking for there, but reach out to us and we can clarify.
I thought the question was, could provide a list of VAs. Did I get that right?
I don't know. It says, can we have some VA incorporates in the system?
Oh,
I'm not sure what VA incorporates mean. I don't know if that means, can I just have a VA get in my system? Not real sure on that. Okay, looks Latoya. Hi, good evening. I am new to investing into real estate. My question is, when the time comes to find an investor, where should I look, or do you have a team of investors that we can use, or do you have any recommendations?
Well, I never actually looked for buyers until I had a property under contract. So that's how I got started. And then once I had a property under contract, I started advertising that property, and all the investors that I needed to know and build, they called on that property. And then I took down all their information. So next time I ran across a property, all I did was just call those people. So I'm not actively really looking for buyers. I'm more just, and I think it's a misconception when people get into real estate that I think their biggest fear is the buyer, when it really, you need to find the seller. That is so priority, is finding the seller. People have said to me a long time ago, if you find a good deal, you will always find a buyer, always. And so I've just kind of lived by that, and it's paid off pretty well.
All right, let's see here. Chris, is it possible to pull my equity out of my home with bad credit? Well, I would say the lender that's going to extend the home equity or refinance or give you a home equity line of credit, they're going to probably look at your credit history to determine whether they want to extend credit to you and allow you to pull that equity out of your home. So I would imagine that's going to be on the credit, the bank's point of view. But if you got terrible credit, I don't know how terrible you're talking about. It may look, maybe you may think it's bad. It may meet more than their minimum threshold. So you'd have to just talk to the bank.
Yeah. What are you going to use the money for? So if you're going to use the money to invest and you can't pull the money, then start with the creative financing, seller financing or lease options, wholesaling you could do as well. Once you start building some income, then it does make it a little bit easier.
Latoya, another question, pre-foreclosure wholesaling with auction date less than 30 days out. Which marketing tool would you use for leads, knowing you have limited time for action? Thank you guys so much. I've learned a great deal just on watching the YouTube videos.
Well, I would call them. That's going to be the fastest way to market, but it's not always an easy conversation either, right? Hey, I'm calling about the house that you own that you have, fallen behind on payments with. We do have a phone script in step 2 under the property address, but that is going to be the very fastest way. 30 days is plenty enough time, by the way.
Oh, yeah. How accurate is the tax amount and the potential equity displayed on REIPro? Well, I'd first say that the tax amount would have to be extremely accurate. It comes directly from the tax assessor. It displays what their tax amount was for that tax year that they actually paid the tax bill. And as far as the potential equity displayed on REIPro, I'd say we're probably one of the top potential equities out there. So we have what the current value is, and today, based on all the comparable sales, like kind property that is selling over, say, the last 30-day window. Most properties updated about every 30 days. And if they have a mortgage on it, we go an extra step, because really the balance on the loan is private information between the bank and the homeowner. And we have some pretty unique formulas that's able to go in and project what the balance would be at a point in time, and then we can subtract that from the potential equity, or from the what the property is worth, and give you that potential equity. A lot of systems will just say, well, they took out a mortgage that was $150,000, and they're going to take today's value minus the $150,000, and that's your potential equity. Problem is that loan could have been from 10 years ago, so we know that they have surely pay down the mortgage, so the potential equity would be greater than that. Okay, Bobby, pre-foreclosure, when making a seller finance offer with a wraparound to come up with the exact loan payment amount for the original mortgage, do you raise the interest rate to the seller?
All right, repeat that again.
We've got to repeat that one. Hold on. When making a seller finance offer with a wraparound to come up with the exact loan payment amount for the original mortgage, do you raise the interest rate to the seller? I think some confusion on calculating payments of the original mortgage versus what you're actually going to calculate the mortgage payment on the wraparound part.
Well, number one, yeah, that is a much deeper conversation, but no, don't look at it that way, Bobby, because that's not how we're going to calculate it. I'm literally taking over the loan in itself. Okay. So whatever that is, I'm not really building more equity into the property for the owner starting off. If the owner requests that they make more money, I would do that after the sale, and it would only be paid upon that sale. So that's something we would need to have a conversation on it a little more in depth. But I did get your email, Bobby, by the way. And I'll shoot you an email with some times that I'm open tomorrow. I know you wanted to talk to me about some coaching and stuff like that. So I'll reach out to you, just respond. I'm pretty flexible tomorrow. I know me and Bo have a few conference calls that we have to do, but I'd love to chat with you tomorrow. So.
All right, Jerry. Hey, Chris and Bo, I hit a roadblock with my pre-foreclosure leads. It seems there's no new future auction dates in LeadPro. I'm guessing because of the moratorium. Is there any advice from a marketing perspective I should be seeking out? Probably depending on the area and the types of mortgages, and which, not all mortgages are going into moratorium, where they can't do it. But that could be, could be a reason that you're seeing a reduced amount in your area. Yes.
Yeah. Some areas you're not going to see that. I keep marketing what's there.
Yeah.
Because they were in pre-foreclosure prior to, or just in the beginning stages of COVID. and they're still in the same situation. So I'd keep marketing all of the properties that are listed there.
And we're going to keep them there for a year unless something triggers to tell us that deed has changed. So if the bank takes it back, it's going to move over into the REO or bank owned section. If somebody buys it, then it's going to move over. It's going to drop off the pre-foreclosure list. So we keep it there for a year. And like Chris said, they're in trouble before this moratorium. It's a good chance they're going to be in trouble after the moratorium. Last question here. I think everybody's maybe ready to go to this debate. I found a lead on REIPro playing around in it, and the particular one shows it has a good size equity potential. I have created my campaign postcard, but I'm kind of stuck on how to proceed and how to find an investor for this. I bet she's trying to wholesale the pre-foreclosure.
Yeah, let's get the house under contract first. Don't worry about the buyer yet. We need to get this house under contract because I was going to say something, but I'm not going to say it. So we really want to get the house under contract first. I think that is going to be the most important thing because we really don't know what we have in front of us at this point. And I don't want people focusing on getting buyers right now. And that's a pretty blunt statement because I think people get too tied up into, hey, I got to go get this, or I got to do that. And I'm like, can we not just go find a deal? Can we not just put under contract? And then all those other things are going to take place. I think it's so important to go get the deal. But where could you find some buyers would be the question, right? Your local REIAs. You're going to find a lot of people that, they go there just to look for people like you that find deals that they're not out looking for. So I think your local real estate clubs, let me say it that way. I always say REIA because Bo, people probably don't know what REIA actually means, so real estate clubs out there, from your meetup clubs to your real estate clubs. Those are the people that meet once a month that come together. Some are obviously doing it online right now, but that's a great way to network with buyers or investors that, you could sell property to.
Yep.
So.
Done. Well, that was the last live question there.
Well, awesome. Thanks again for, coming together. That's what this is all about is helping you guys, get those answers. Sometimes just conquering some of those fears that we have in the business. And, I think our goal is just get everybody on the right track. And I see so many people, they get started, but they just start wrong. And coming together, doing these things, I think it really helps. We've had tremendous amount of people reaching out to us and just love this thing that we do.
Chris, normally I'd let you just go ahead and keep on talking, but just what you said about how it's really helping people. We just got a comment. Really, it's in the Q&A panel here. It says, it's from Hector. He says, hello, REIPro family. He says, I don't really have a question, but I do want to say how grateful I am to be a part of this phenomenal program. We don't only pay for a software to help us organize our business, but we also get huge amount of education with different courses included with the monthly membership. With others so-called real estate investor gurus, you only get the course that you pay for and you have to figure everything else out for yourself. With Chris and Bo, we have the luxury of this Q&A session, and this is priceless. So thanks, Hector. We like to also read those types of comments because it really lets other people know that there's a wealth of knowledge here as being part of the REIPro family, being a member of this whole thing. We're all here to, extend our knowledge to you guys. We love doing it. We're passionate about real estate, and there's nothing greater than to see, you guys become successful and we're able to pay it forward in the tools we provide, the education we provide. So I just really appreciate you giving us that shout out.
Heck yeah, Hector. What's up, Hector? Hector is, we actually had a conversation today, Bo. So,
okay.
And I always tell him, hey, join this, it's kind of the cool thing with, the coaching side of it is you get that personal one-on-one time.
And somebody is asking, what's the price range on personal coaching? I don't know. Do you have to be experienced if you're a beginner? Are we even ready for coaching if we're a beginner?
I always say, usually the experienced people are the people that take longer to teach because they've been programmed to think one way. And it's kind of undoing mistakes where somebody coming in from, just when I say getting started, I'm saying you've done less than 20 deals. To me, that's getting started. And that person really doesn't understand all the mistakes yet, right? So, what we like to do is try to avoid those things and just go down these paths, but also it's, doing this for, good Lordy, I've trained so many people, but it's the experience. Yeah, there's a great tool. There's the education side. We like to put them together to create REI Pro. But from a personal, hey, Chris, look, I need to use all this. It's great, but I need to go to the next level. That's where the coaching, because it's the experience side that comes in when you review a deal with me. It's like, okay, no, they're not going to take that offer, and here's why. I already know that what's going to happen with this thing. How did they say that to you? Because sometimes how they say it to you is the difference between shifting strategies in the middle of a conversation. There's that level of, hey, this is what I'm going to do the rest of my life. This is what I love to do. I need to get to the next level. That's where the personal coaching comes into play. Outside of that, you have all the tools and education right in front of you. I didn't have any of this stuff when I got started. And this is just a tremendous help and benefit for everybody out there. So Bo can put in the email if you're curious or interested about coaching. We do take limited amount of people. Some programs do change, just a simple fact of demand. And so anyways, reach out to us. We'd love to hear from you.
Yep. Put the email into the chat window for anybody that wants it.
That's right.
Well, I appreciate everybody being here.
It's Friday tomorrow. Yeah. I know a lot of people love Fridays, right? Fridays is like a great day to make offers, by the way. So, because usually people are in a good mood. Never make an offer on a Monday, right? So, hey, it's Friday and then you have a weekend. So,
right.
Hopefully you have the weekend off. We'll just start there. But everyone have a great weekend. Let's get out there. Let's go find some deals. Let's go put these things together and bring those questions, to the table when we do these live Q&As, because it's just going to help you get to that next level. So until next time, thank you guys so much. And we'll talk to you soon.